Watch out for the crypto projects that build in the bear because they will crush it in the bull. And I got to tell you, there is no better time than right now because I know some people will say that this is a this is just a very prolonged bull market. It doesn't feel like a bull market. And I got to tell you, some of the things that are going on behind the scenes makes me quite bullish, even though the sentiment itself is not too great. And I'm going to talk about three different projects, of course. We're going to talk about Solana, which I know some of you absolutely despise, but it is what it is. Talk about Ethereum, and then everybody's favorite, get into Bitcoin. So the first piece, I think people have been talking about it lately, especially on YouTube and the Twitterverse and all those different places. But I am right now in South Korea, so my time frame's a little bit messed up. But this is what I've learned and how things are progressing. This is from Business Wire. It looks like Visa is expanding stablecoin settlement capabilities to merchant acquirers. And on top of that, it's going to be using Solana. So this is what we have. Visa is expanding its stablecoin settlement capabilities to the high-performing Solana blockchain and is working with merchant acquirers WorldPay and Nuvi. Visa has already moved millions of USDC between its partners over the Solana and Ethereum blockchain networks to settle fiat-denominated payments authorized over VisaNet. And this would be, to me, this was a big story anyhow, but it really hit home today as I was taking different taxi cabs and paying for things here in South Korea. Fantastic food, fantastic people. And one of the things that you have to understand about payments, and something I never really considered, there's when you actually purchase a product or a service or a good or whatever else, and settlement. When I purchase something, let's just take a taxi cab driver. When I purchase something, it's instantaneous, right? I give them my card, they run it through, boom, everybody's paid from what we think it is. But there's actually another layer to that. That's the settlement. And settlement is expensive, and it takes a lot of time for the money from my account in my bank, USAA, to go over to the merchant's account who will be here. That's going to take a lot of work and effort and cost. So to actually reduce that would actually be a great thing. And what Visa is doing, which is lion's share of what people are using for payment processors, is they're going to use crypto behind the scenes. And one of the ones that they picked on top of USDC, the stablecoin, and of course in the Ethereum network, is Solana. And what this says to me is, I know people, like I said, they hate Solana because, bro, it's a totally centralized network and it always goes down all the time and just awful. Well, Visa must have done its homework because they picked it. So I know people may say that they hate it and whatnot and it's just awful, but you have to look behind the scenes and go, which ones are winning in the background? Which ones are building? And I don't really care. I'm agnostic. I'm not here to change the world. I'm here to change my bank account. And if Solana is going to be one of the ones that are there, so much the better. Now, does this mean that Solana is going to take over the world? No, but it's a step in the right direction. You have to pay attention to what's going on, I think. So this was actually from a quote from Kai Sheffield. Nailed it. Head of crypto at Visa. He says, by leveraging stable coins like USDC and global blockchain networks like Solana and Ethereum, we're helping to improve the speed of cross-border settlement and providing a modern option for our clients to easily send or receive funds from Visa's treasury. Visa is committed to being on the forefront of digital currency and blockchain innovation and leveraging these new techs to help improve the way we move money. Now, does this mean that this is the only thing moving forward? No, this is just one of the many options that are out there. I know people are going to ask me, well, wow, cross-border payments, that sounds like something XRP should do. Look, XRP can't do it all if that's what you're into. So with these companies moving forward with different places and different projects like Solana, I think it's something to sit up and pay attention to and say, you know what, if it can produce this settlement, if it can actually have the TPS that is high, and if it can stay up and it begins to actually, pick up these partners, this might be something to take a really harder look at as far as investing. And again, I don't care if you hate them or not. It's up to you to take a look at this information. And to me, I think it's a step in where things should go. And on top of that, Solana, this is from CoinShares, year-to-date inflows suggest it's the most loved altcoin. Now, let's be honest. A lot of altcoins, including Solana, are down massive. So it's not like this is, this is going to turn things around. I think Solana is down over 93, 94% for the year. And we took a look yesterday at some of the biggest bag holders. And unfortunately, Solana is way down from its high of $212. Does that mean it can't rally? Well, just take a look. So Solana, and this is from CoinShares report, trading volumes for crypto investment products, just products in general, for the week ending September 1st were 90% above the year-to-date average. It marks a 7-week run of negative sentiment that's seen 342 million leave crypto products over that time. But year-to-date, investment products remain net inflow positive at 165 million. And we want to take a look at which ones are net positive. Outflows haven't affected Solana products, however. This saw weekly inflows of $700,000. I guess that's somewhat positive direction. 9th straight week in a row with inflows of 14.1 million over that time, and year-to-date inflows of $26 million. Bitcoin products were the only other assets to see weekly inflows besides Solana, totaling 3.8 million. Short Bitcoin, Polygon, and ETH products all recorded weekly outflows. So why is it such a big thing? Again, there are narratives out there. It's not just all about TA. There's actually, some narratives and some positivity of people that are building. September 1st, MakerDAO co-founder Rune Christensen submitted a proposal to build the project's upcoming native chain off a fork of Solana's code base, despite its long-held relationship and ties to Ethereum. August 23rd, it was reported that Shopify added Solana-based payment network, Solana Pay, starting with the stablecoin USD coin. Solana Network has also seen some performance and reliability improvements with only one outage in 2023 so far. It's pretty good. Again, people will say, but it's outages all the time. I think that's the narrative that we've seen before. Now we'll see if it can keep up as people use it more and more and more. But so far in 2023, has only been down one time. And I like this last sentence. Take this with a grain of salt. Solana's price is up around 95.5% year to date. 95, almost 100%. Solana's price is up almost 95%, but it's traded mostly sideways around $20 to $25 since mid-January. However, Solana is down 92% from its 2021 all-time high of nearly, wow, I was wrong, $260. So right now you're looking at a price of around $15, $20, somewhere around there for Solana. Just remember that from its all-time high to where it's at right now, it's a pretty undervalued asset. Does that mean that you should FOMO into it? No, but I will just tell you this. Solana is one of those projects that I dollar cost average every day. Now, does that mean that it's going to be the end-all be-all? No, but again, I think it's something to take a look at. So let me know what you think about that in the comment section. I'm sure it'll be spicy for what you say. And on top of that, I think this is more good news. Just optionality. MetaMask is going to have a sell feature, which you're going to be able to turn Ethereum and Ethereum-based products and L2s into cash right within MetaMask. Here's what we got. So MetaMask wallet owners can now cash out of their Ether with the press of a button, converting their holdings into straight cash, fiat currency. For now, it's only US dollars, euros, and the British pound are supported, which is pretty good. And you get 3 different fiats. Initially, only Ether or Ethereum mainnet could be cashed out, but MetaMask does have plans to expand the other layer 2 networks and assets. Layer 2s, maybe an Arbitrum, maybe a Polygon. Oh, that's a side chain. So we'll see. MetaMask didn't elaborate on which layer 2s and tokens it plans to support or what timetable, but it is in the network. There are 4 known crypto fiat off-ramps that MetaMask is working with, including MoonPay, Transact, Sardine, and Banksa. These are the ones that are going to allow that for you to turn your crypto into cash if you so choose so. I don't know why you do that, but everybody's got their own thing. Each of these services will offer real-time quotes to users who like to sell Ether. Once the user selects the providers, they'll be redirected to a website, and they'll have to link to their bank account. So again, if you're into that, that's not my thing, but if you're like, hey, I want to link my bank account to my Ethereum wallet or MetaMask, go right ahead. And it looks like that's going to be optionality for people moving forward. So that takes care of the Solana. That takes care of the Ethereum news. Let's go to everybody's favorite, Bitcoin. And there's good news on the horizon. It looks like the SEC, this is from Grayscale, they have no grounds to reject the Bitcoin ETF conversion. This is just a quick little snippet story that Grayscale's legal team wrote in a letter to the SEC yesterday. And it states, after the commission has had the opportunity to fully analyze the court's opinion in light of the record, including the reasons for rejection set forth, we believe the commission should conclude that there are no grounds for treating the trust differently from ETPs that invest in Bitcoin futures contracts. And again, this was a decision going in Grayscale's favor, which I thought was pretty enormous, that they said, look, there's no difference between a futures ETF and a spot ETF. So you should allow us to do that. And what people are saying is that because the court has decided in that way, that the SEC will only move towards a Bitcoin ETF, and it is inevitable. I personally think it just gives the SEC a little bit more time to give a reason as to another point of why they'll reject this Bitcoin ETF, but I could be wrong. And we'll see how it all works out. And it's not just random people that think this ETF is going to go through. Actually, everybody's favorite SEC commissioner, or former SEC commissioner, Jay Clayton, was actually on record saying that the ETF approval is inevitable. I don't know why that he couldn't do it beforehand, but here's Jay saying that it's going to actually happen. This is a quote from CNBC, and he states that it's clear that Bitcoin's not a security. I think even Gary Gensler has said that. It's clear that Bitcoin is something that retail investors want access to, institutional investors want access to, and importantly, some trusted providers who are fiduciaries or have duties of best interest want to provide this product to the retail public. So I think the Bitcoin ETF is inevitable. The thing is with Jay, and he knows it's very true, what the SEC is saying is that the problem with the spot ETF is the ability for manipulation. And that's why they want monitoring. And that's why BlackRock came out, and all the different ones, Bitwise, ARK, Fidelity, came out and said, okay, we're going to choose Coinbase to use as to absolutely cover this for monitoring, which will reduce manipulation. However, it doesn't make much sense to me of why they're going to approve a futures ETF, why they can't approve a spot ETF, other than the fact that Gary Gensler doesn't want to do it. And the White House, who he works for, is also saying the same thing. So I'm in the minority. I don't think it's going to be approved, but we'll see. Everybody's against me, even Jay Clayton. So we'll see how it works. Hopefully it does, but it does. To me, again, it doesn't really matter because I think the narrative is there. We got some pretty big players who say it. And I will say that I think, and this is from Looking to Bitcoin. There's a link in the description. It's 100% free. I mean, there's some upgrades if you want to use it now, but there's this thing called the rainbow chart, the rainbow price chart indicator. And this is just a logarithmic growth curve, and it just kind of takes a look at sentiment across the board. So when things are, it makes things very simple of where you think that potentially you could sell or where you should buy. And I just was perusing the different charts, and it's pretty good. It shows you like when things are way massively overheated. 2011, it did a great job in 2011, 2013, and 17, it nails it perfectly. But it could be looking retroactively. Didn't do such a good job in 2021 when we had that double top. But I will tell you what it really is good at is for when things are bottoming and a good time to accumulate over time. Now, I can't tell you what to do. I'm not a financial advisor. But you can just see that when it's cold and cooling off. This is in 2015. It was, you had a high in 2013 of, gosh, almost over $1,000, and it dropped over 80%. Now you're like 229, 218. Great time to accumulate. And then 2017 overheated, and then figured out that, hey, a great time to accumulate was around March 18th, March 2020. When that thing called coronavirus came about, and Bitcoin was only 5,000, 4,800. And now again, let me zoom in. There's been very few times when it's gone below the blue level. And that just happened in December and November when the Bitcoin price was 16,510. Now, does that mean it can't go lower? No, but I think we're pretty darn close to what it is. And unless it drops off the cliff, and we talked about this in video a couple of days ago. We took a look at the macro factors the difference with the SEC, what could potentially happen with the ETF. But I mean, if we're looking at the bottoms, maybe the bottom is in. I still think it could go lower, but I mean, if we're taking a look at different charts, we can see that things are pretty cool off. Does that mean it couldn't drop below 16 again? No, could happen again. But this is why I dollar cost average. I think that Q4 could be pretty bad if we go into recession, but things are looking, I mean, reasonable for dollar cost averagers like myself. But there is some things that concern me. And lastly, Coinbase. I don't know why they're doing this, other than it's a nice way to make money. Coinbase creates a new crypto lending service geared towards large investors. You know who also did lending services? BlockFi and Celsius. So this just is, it's concerning to me because I thought Coinbase was going in the right direction and just doing different services like Coinbase One, where you could sign up and reduce the amount of fees that you have for a monthly fee. Works great. Now they're getting into lending. I just think it's too much, but here's what we got. So Coinbase created a new crypto lending service in the US for institutional clients, helping to fill the void left by blowups of firms like Genesis and BlockFi. Didn't work out too great for them. The platform was quietly revealed in an SEC commission filing on September 1st, which showed $57 million already been raised for the program. Again, money's a powerful drug. And when you have that much and people want to buy it, you're like, sure, come on in. So clients can lend Coinbase money, predominantly crypto assets, and get collateral exceeding the value of the loan. That's exactly what Celsius did. Celsius, I still believe, was a Ponzi scheme, but whatever. Such over-collateralization acts as a safeguard from disaster. Same thing that happened with Celsius. BlockFi, I think there was also the same thing. Coinbase can then turn around and make secured loans to institutional trading clients, akin to the prime brokerage services banks provide in traditional finance. And of course, this was an issue also with Three Arrows Capital. So maybe we learned our lesson. It's not going to go back the same way, but who am I to say? New service differs from the controversial Lend program that Coinbase canceled in 2021. That was pitched at retail customers. SEC didn't like that, of course. And of course, there wasn't enough disclosures, and Gary wanted to protect everybody harder. So that's what we have. Good luck to Coinbase. I think that's a mistake, but what do I know? And that's it for today. So look, everybody, thanks for stopping by. If you liked today's video, give it a thumbs up. Consider subscribing. Everything we talk about is time sensitive. And now, if you're so akin to stick around, I'll answer all your questions to the best of my abilities, and we'll go from there. But that's it. If you got to take off, thanks for stopping by. See you guys in the next one.